Okay, I promised you we were going to talk about financial advisors. I do not hate financial advisors, despite some of the things I've written about them and said about them. However, I use the term financial advisor differently than most of the financial services industry. Basically, you don't have to do anything to call yourself a financial advisor. The term, legally speaking, means nothing. And so a large percentage of those who call themselves financial advisors are not what you think of in your mind when you hear the term financial advisor. What they are is representatives or agents or salespeople. And what are they selling? Well, they are generally selling mutual funds, commissioned or loaded mutual funds. They are selling annuities. They are selling insurance. And they call themselves financial advisors. And maybe they even throw you a pearl or two of what could be called financial advice. But the problem is they have this huge conflict of interest, right? How are they paid? They are paid on commissions. They're paid on commissions. So when they sell you something, they get some percentage of what you use to buy it. That's fine. I have no problem with commissions. Okay? I've had staff members that I pay on commission. When they can sell an ad, they get a percentage of it. When I buy a car, I buy it from a commissioned salesperson. I don't have a problem with them earning a commission selling me the car. It's fine. But when I walk into that dealership, I don't expect that Toyota salesperson to give me unbiased advice about all cars. They can help me choose between the models of Toyotas. They can help answer questions about what's available for that model year. But I don't go to them asking, should I buy a car at all? Much less, which car should I buy? And that's the way you should interact with, salespeople. You should use them for what they are good for, but not mistake them for an unbiased advice giver, which is what you're looking for when you hire a financial advisor. So the easiest way to make sure you are hiring an advice giver is only pay for advice. That means fee only, not fee-based. Fee-based means you're paying commissions and a fee, but fee only. And fee only means that you're paying them in one of three ways. The most common way is an asset under management fee. I'm not a huge fan of this. It's fine when you don't have that much in assets. If you're paying 1% of your $100,000 invested, that's only $1,000 a year. That's a fair price for good financial advice. In fact, even if you're paying 1% on $1 million a year, that's only $10,000 a year. That's probably a fair price too. But if you're paying 1% on $5 million, you're getting ripped off. So as your assets go up, you've got to be negotiating lower fees with someone who charges asset under management fees, or you got to move on to a different advisor, or, even if you're getting good advice, you're just paying too much for it. A couple other ways you can pay advisors. You can pay them an annual fee, whether it's, a fee for them to do financial planning, and be there for you when you need them with questions or whatever throughout the year, some sort of retainer. Or you're paying them flat fees for the project, to help you draft up a financial plan, or you're paying them on an hourly rate, often which is higher than the hourly rate you charge. But that's okay because you're paying for advice. When you don't need the advice, you're not paying more. And that's the way you hire your accountant. That's the way you hire your lawyer. That's the way you hire your doctors, right? So why shouldn't it be the way you hire your financial advisor? It's a little harder to find people that charge flat fees, a little harder to find people that charge by an hourly rate. But the bottom line is you just need to calculate what you're paying. Is that a fair price? Am I getting good advice? Okay. But a lot of us, including me, as I mentioned on the podcast, get into a situation where we realize we have made this mistake. We have hired a salesman. We have mistaken them for a financial advisor, and we now need to extricate ourselves from that situation. And I have got an online course called Fire Your Financial Advisor. And you can imagine that title was a big hit with our financial advisor advertisers. And we keep a list of recommended financial advisors, real financial advisors, not salesmen, real financial advisors on our recommended tab. You can go to whitecoatinvestor.com/recommended. You'll see all the professional services that we recommend. But you get into a situation and you're like, okay, how am I going to get out of this? And step one is not to make any huge change right away. Step one is to figure out, what are you moving to? And that might be hiring a new advisor, a real advisor this time. And if that's what you're going to do, go do that first. Go hire them and have them extricate you from the situation. That's what you're paying them for. You might as well get some value for your fees. If the answer is, I'm going to try to do this myself, I'd recommend our Fire Your Financial Advisor course, not because it's like specific to firing your advisor. In fact, the first module teaches you how to work with advisors, but because it will allow you to have a plan in place. And that's what you need, is an overall plan, whether you put that in place with the advisor's help, whether you use our course to do it, whether you go on forums and read books and figure it out yourself. You got to have a plan. So get that plan in place before you make the changes. Otherwise, you're likely to have to make changes multiple times. Okay, so that's my recommendation if you got to move on from an advisor that maybe you shouldn't have hired in the first place. And if the advisor works for a company whose primary job is, selling you insurance, for example, a company that rhymes with Schmorschwester and Putual, you need to do this as soon as possible.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.